Hello viewers, how are you? Today's video is about the performance report of Canadian banks over the periods of 2021 to 2023. All six banks have gone through various cycles during this period. So I'll provide you an evidence-based analysis, and based on that analysis, we will examine if Canadian banks are still an attractive investment for the investors in the coming year 2024 and 2025. But before I move on to this video, I would like to warn you that this video is only for information and entertainment, and I'm not a financial advisor, so please don't be influenced by this video. If you're planning to invest any monies in Canadian banks, I would strongly recommend that you do your research and then decide what you want to do. So the analysis or the performance analysis of the Canadian banks is based on two factors. One, the movement of Canadian banks' share prices during this period, and the second is the yield or the dividend they paid out during these years. So what percentage they paid and how much did they pay? And of course, for looking ahead in 2024, we'll again look at what are the environment at this time, what are the forecasts for future rate cuts by the Bank of Canada, and the dividend rate expected during these years. So a number of factors will be discussed in this video. First of all, I want to refresh your memories starting from 2020, when there was a pandemic in the world, COVID-19. You must have not forgotten about it. The banks had big losses in 2020, but due to very, very historically low interest rates offered by the Bank of Canada, banks' share prices surged in 2021. So all six banks, TD Bank, Royal, BMO, CIBC, Scotia, National, they all posted double-digit gains in their share prices. For example, TD Bank increased by about 35% in 2021 over 2020, Royal by 28.4%, BMO 40.7%, CIBC posted 35.5% gain in 2021, Scotiabank 37.9%, and National Bank 34.6%. So double-digit gains in share prices. Investors were all happy. Low investment environment was working fine. What happened in 2022? Here comes that year. So now, this was the year when Bank of Canada started to increase interest rates. And I would say they followed a very, very aggressive strategy to raise the interest rates. And that increase in interest rate era continued up until 2023. So, of course, when interest rates increased, investors got scared because they thought that there will be some disturbances in the financial system, and especially in the US, actually it did happen, and there was a Silicon Valley Bank that was actually bankrupt and closed. So reflecting those kind of fears and increasing interest rates, bank share prices started to fall in Canada as well, following the similar pattern in the US and rest of the world. TD, for example, declined by about 9.6%. Royal lost 5.2% in its share price in 2022 over 2021. So year over year again. As you can see on your screen, this is the sheet I'm reading. BMO declined by 9.9%. CIBC and Scotiabank they've posted actually double-digit declines in their share prices, falling by 25.6% for CIBC and a decline of 23.9% for Scotiabank. National Bank posted only a modest decline. It is, it's not really a very common commercial bank, so its share price remained pretty stable. That happened in 2022. Then comes 2023. In 2023, few developments occurred. The first one was that in the middle of, or maybe in the middle of, or in early 2003, investors expected that Bank of Canada has done enough in 2022 and is going to stop its cycle of its increasing interest rate strategy. So there was a hope that interest rates will either stay unchanged in 2023, or maybe in the late 2003, Bank of Canada might follow a strategy to start reducing their interest policy rate or interest rate. But this actually did not happen, and in 2023 we did see an increase in interest rates by the Bank of Canada. However, 2023 compared to 2022 was not as bad as what we have seen in 2022. Year-over-year basis, change in all these share prices of these banks, we have seen a slight decline in TD to a 2.4% in 2023 over 2022. Royal Bank actually gained 5.3%. BMO also gained 6.8%. CIBC gained a lot, 16.4%. Scotia gained 3.6%, and National Bank gained 10.7%. So there was some gains, although not a lot for TD and National and Scotia Bank and also Royal Bank, but for BMO, CIBC, and national banks, there was a quite impressive increase in their share prices. So we have seen in this historical analysis, when interest rates were historically low, investors had more confidence and they invested more into Canadian banks. When interest rates increased, investors pulled their money back from the banks and stopped investing into Canadian banks. And when there was a little bit of a hope of a gain into interest rates and to go down, they started to bring their investments towards the Canadian banks. The second factor that I'm looking now is about the dividend offered by the banks. We all know that there are two types of investors in the market. Some investors, they invest to gain equity by investing into the banks, so that if their share prices increase, they make some equity gain. The other type of investors are those who want regular income. So they look at the dividend. How much dividend is being paid by the banks, and is there a regular income coming to them, or has there been a disruption into the payments of dividend rates or dividend amount? So looking at the dividend of all the banks, over the 2020, 2021, 22, 23, none of the banks stopped dividend or declined their dividend. Rather, they increased their dividend. In 2020, for sure, there was no increase in dividends by the banks, but after that they started increasing. So just to background, in 2021, TD, for example, dividend was $3.16, which was 3.3% of the share price of that time. Royal Bank's dividend was 3.2%, BMO's was 3.1%, CIBC was 4.1%. Scotiabank was offering 4.6% dividend rate, and National Bank at 3.1%. So that was the situation in 2021, the year when Canadian banks recorded impressive and very, very solid growth in their share prices. So from 21 to 22, banks increased their dividends and increased by big margin. So all the banks, you can see on the screen, the second slide that I'm showing you is that TD Bank dividend rate increased from 3.3% in 2021 to 4.1% in 2022. So they paid $3.56 a year in 2022, and if that dollar amount is divided by the share price of TD Bank in 2022, so we get 4.1%. So TD Bank dividend rate increased from 3.3% to 4.1%. Royals increased to 3.9%. BMO increased to 4.4%. CIBC dividend increased to 6.1%. A 2 percentage point increase in the dividend, and that is because in 2022 CIBC recorded sharp decline in their share prices from $73 or $73.70 in 2021 to only $54.80 in 2022. So that reason CIBC did not change its or reduce its dividend payments. So impressive 6.1% in dividend rate was offered in 2022 by CIBC. Scotiabank also, because its share price went down, the dividend rate jumped to 6.7% from a low of 4.6% in 2021. National banks also increased dividend, so dividend rate increased from 3.1% to 4% in 2022. In 2023, as we have seen, banks recovered some of their losses in their share prices, but they also increased their dividend. So we see a slight increase in dividends offered by the Canadian banks. For example, TD's dividend rate increased from 4.1% in 2022 to 4.4% in 2023. Royal's dividend increased from 3.9% to 4% in 2023. BMO's dividend increased from 4.4% to 4%. Oh, actually, BMO's dividend did not increase in 2023, so it remained at 4.4% because it had big jump in the share price, because the share price increased from $123 to $131, a 6.8% increase. So that's why we don't see any in percentage terms. We didn't see any increase in BMO's dividend rate. CIBC's dividend as a percentage declined, although in dollar amount it increased from $3.32 in 2022 to $3.49 in 2023, but the price of CIBC share increased from $54.8 to $64 in 2023. So that's why we saw, as a percentage term, the dividend rate declined from 6.1% to 5.5%. Scotiabank dividend rate remained unchanged in terms of the percentage, but in absolute value, in dollar terms, Scotia also increased its dividend from $4.09 in 2022 to $4.18 in 2023. National Bank's also dividend rate remains the same at 4%. And what we are getting from it is that all six banks, all of them, they increased in dollar value, they increased their dividends. although in percentage terms, their dividend either declined or stayed almost similar or unchanged. So that's what we are seeing in terms of dividend rate. Here, I would like to mention that Canadian banks are known for paying out dividends, and they have not cut dividends for a long time. So it's regular income that is an attractive, factor for those investors who are looking for regular income. They are inclined towards investing into Canadian banks. Now is the time to look into the future. Although it is very difficult to look into the future, because if I know the future price of a share of a bank, I will definitely make best use of that. But based on our analysis and based on the evidence, we can make some guesses. And these are only guesses. So here comes 2024. We are in January. This video, by the time I'm preparing this, is 17th of January. And I'm looking at the prices on the 17th of January 2024. But before I talk about the prices and the dividend and all other factors, one thing happened in 2024. Recently, I think 2 days ago or a few days ago, Statistics Canada released its report on CPI, Consumer Price Index, or inflation, that is mainly is the inflation. The inflation increased in Canada from 3.1% to 3.8%. Is month over month basis. So it's monthly data, we do get it. So the hopes that people had in 2003 that the increase in interest rate cycle is finished, Bank of Canada is going to start declining its interest rates by the middle of 2024, those hopes started to fade. As a result of that, we have seen some declines in the first month of 2024 in terms of share prices of Canadian banks. For example, TD Bank, if you look at it, its price declined by 6.7% by January 17, 2024, compared to its closing price on December 1st, 2023. So it declined from $85.6 to $79.9, posting a 6.7% decline. Royal Banks also declined by 1.7%, BMO share price declined by 3.7%, CIBC declined by 3.3%, Scotia by 2.2%, and National by 2.9%. So we have seen investors immediately reacted with fear that Bank of Canada may not decline its interest rates in 2024. So that's why they started to pull their money back from Canadian banks shares, and their sell-off started. However, we don't know, and we need to get more data to see if this trend would continue. We don't know at this time if Bank of Canada is going to decline its interest rate or is going to increase its interest rate because of the increase in inflation in the previous month. So there are lots of ambiguity at this time in this analysis, but apparently it seems like that 2024 is unlikely that Bank of Canada would reduce its interest rates, but I don't see a reason for Bank of Canada to be so impatient to reduce the interest rates, because the purpose of increasing interest rate was to control inflation, and the Bank of Canada target rate that they want to bring it at 2%. But actually they are seeing an increase in inflation rate from 3.1% to 3.8%. What Bank of Canada thinks, if they think that current policy rate is strong enough and it will bring inflation rate in the coming months, bring inflation rate down in the coming months, they might hold interest rates, but I don't see an immediate decline in interest rates by Bank of Canada. So, given that interest rates remain unchanged for the major part of this year, there is a possibility that there will be some bargains available for investors who are looking for an gain in their equity, because if they buy at a lower price today in 2024, they might be able to make some gains later in the year or in 2025, when definitely we expect interest rates to be down. So that's about the share prices. So if you are an investor who's looking for some equity gain, yes, you can go for share prices. Now come to the dividend. If you are an investor who wants regular income from Canadian banks, don't worry. All banks are offering you good dividend rate. If you want to get a little bit of higher income and can sacrifice increase in the share prices, Scotia Bank and CIBC would be your choice. If you want a stable share price, or a little bit more higher increase in the share prices, then TD Bank and Royal Bank would be your choice. It all depends of your choice, but dividend rates are attractive still in 2024. This dividend rate that I'm showing you here on the slide, actually I have assumed no increase in 2024. This is based on December payouts of these banks. So I have analyzed them. Still, environment is not very clear, but one thing is clear, that dividends will be coming to you. Just continue to collect money every quarter from the banks, 4 to 5%. But if you are looking for price of Canadian banks share to increase, it's an opportunity to buy at this time. When the interest rates start declining, these prices are going to shoot up. That's what my analysis. But again, I'm warned you here that this is my analysis. Don't depend on this analysis. Don't get influenced by this analysis. We'll see you in the next video. Till then, bye-bye.